We're still in Nigeria. To describe the central bank's demonetization exercise as disastrous in some circles would be a little bit generous. It's been criticized for many things, but it did spur an aggressive surge in the use of digital payment channels, even in the first 2 months of this year. Data from the Nigeria Interbank Settlement System, or NIBS, as you'll hear it being referred to very shortly, indicates that in the first 2 months of the year, the volume of transactions being made on mobile phones went up by 70%. In those 2 months, Nigerians settled transactions worth over $10 billion. The value of transactions rose by a much smaller number, though, just around 8%. In a country where just 40% of adults have bank accounts, but which is also home to at least 156 million mobile data connections, mobile service providers and digital payment apps on paper seem to be very well positioned to capitalize on this demand for payment services. Earlier on, I spoke to Adesoji Solanke, the director in charge of frontier banks and fintech research at Renaissance Capital. I asked him if these numbers suggest that Nigeria's payments market is at the inflection point where non-cash payments really start to take off.
So we haven't hit an inflection point. The level of digital payment penetration in the country is still very low. Actually, those numbers you're looking at, those numbers have been consistent for the last 10 years, right? So it's been fairly maintained. If anything at all, there's been an improvement in the short term. Okay, maybe that number sort of might normalize to the historical levels, which are still high double digits. Okay, but the growth rates are there's still significant room for growth in future.
Where exactly are the pain points? Is it in the GSM network? Is it on service on both ends? Simply not being able to confirm transactions in real time? Where's the pain point?
So listening to the players in the ecosystem, the NIBS is a big provider, is a big centralized provider, okay, to sort of route payments, point A to point B. But there are other players in the ecosystem, right? So there's InterSwitch, there's a number of other providers domestically. So the switching infrastructure, the quality of their solutions needs to be upgraded pretty much, because anyone that sort of layers on top of all of these players, the quality of your end solution to your customers, your merchants, etc., would always be affected by the quality of the infrastructure that you're layered on top of. Okay, right. But what's been going on in Nigeria is also that because of this problem, certain players have started getting switching licenses. For example, the banks over the last couple of years, the big banks have been getting licenses that also allow them to provide switching solutions. So GTB, Access Bank, for example, they've set up subsidiaries. So GTB has Habari, Access Bank has Hydrogen, and I believe those subsidiaries now have switching licenses. So if you're able to build a switching network just for that select few banks, okay, which probably represents 60–70% market share in the country, you're probably able to route transactions more successfully within the country, just within yourself.
There's an extra angle to this that I found quite interesting when doing a bit of initial reading on the subject. The apps are making a significant dent, if you will, into trying to essentially make it easier for people to get money from point A to point B. OPay, PalmPay have done some interesting things on that particular front. If you're looking at the entire payments architecture in Nigeria, what is the edge that the likes of OPay and PalmPay are bringing to the table vis-a-vis MTN and Airtel and their mobile wallet solutions?
OPay and PalmPay, they've had maybe 1 or 2 years, should I say, head start before the telcos, right? The structure of Nigerian financial services, you have 3 major players trying to drive last mile financial, digital payments in the country. So you have the banks, you have the telcos, and now you have private enterprises. The banks have always been there. The private players really, particularly when it comes to agency banking, they really started coming into the picture in 2019 onwards. Okay, and that's when you started seeing OPay, then subsequently PalmPay, etc., coming into the picture. The telcos only started getting their licenses, I believe, in 2021, 2022. So OPay and PalmPay, they've had, should I say, about 2–3 years head start to really understand the landscape. And they came into the market quite aggressively. They had capital to deploy. They made some mistakes, but they've had their learning points. PalmPay has a fairly unique proposition, which is that just given the nature of its underlying shareholder, you have these apps already pre-installed in probably the largest market share mobile phone in the country, right?
These are
Which are some
devices
of the
made by Transient Holdings, right? The
yeah,
guys who own
the Android,
Techno and so on, Techno Brands and I believe a few
correct.
others.
Yes, this Android-based devices. So those were some of the advantages that Transsion had. OP, on the other hand, very last mile focused execution in terms of their proposition in the market. They initially started with a bunch of super app type propositions, then they pivoted to agency banking, and now they're trying to drive merchant acquiring. But one caveat to also mention, because I think the article you're referring to might have been the one that came out on Semaphore. One thing to know is that the fact that your app is the most downloaded on Android doesn't necessarily mean that it's the most used, but it's a good initial indicator that at least people are trying to download your app. But these apps are not necessarily that active. People might use you initially for the initial maybe transaction, but where the money ends up sitting tends to still be with the bank.